Mr. Chair. So here we see, again, the picture is kind of flipped. So we see both in terms of gross state product and in terms of output, we see overall declines. Again, a lot of that is going to come from the government sector. We actually do see an increase in disposable personal income. That comes from the fact that while, first of all, personal income, kind of pre-tax income, has gone down somewhat because of this decline in jobs, there is still this large tax cut that's in effect. And so some of the increase in personal income, in disposable income that comes as a result of the tax cut still shines through. And so people still, on net, have more to spend, even if they have less personal income overall. And so now looking at the fiscal impacts, if we look at the impacts on government revenue, we actually see, taking into account all of these dynamic effects, we see an average revenue impact of $180 million, which is the same as the static impact. It just so happens in this case. And the reason why, given these job declines and decline in personal income, the reason why we don't see a further decline in revenue is because while income tax receipts are falling by even more than they had, by more than $180 million, the fact that disposable income has still gone up means that people are still going to be able to consume more. So even though there's less income, there's more disposable income because a lot less of that is being taxed. And so, for example, if your sales taxes are going to, there's going to be an increase in sales tax receipts that's going to counterbalance the losses to, the further losses to income tax revenue. And so we're going to see those two even out in this case. And here we also, in the case of government expenditure, again, remember that we cut government expenditure in a static sense by, again, $180 million to match the static loss in government revenue. And here we see an additional about $2.5 million loss in expenditure. And that's going to come because, again, government spending here is largely tied to population and to the size of the economy, both of which are falling somewhat.
Okay, and again, forgive me for keep going back to this, but I'm still trying to wrap my mind around this difference between scenario 1, 2, and 3. Scenario 1 and 2, obviously, we're looking at a $175 million basically decrease in net revenue to the state. And scenario 2 assumes for corresponding cuts in the budget, correct?
That's correct.
Whereas scenario 1 does not.
That's correct.
So I guess what I'm looking at is, when I look at the chart, scenario 1 had a $175 million net decrease in revenues, and scenario 2 has $183 million net loss in revenue. And again, what I'm trying to understand here is this saying that the net revenue decrease to the state is greater if the state cuts spending?
Thank you, Mr. Chair. So it's going to again depend on. So if we go back, right? So there's right. So in the first scenario, we see an overall loss in revenue of about $170 million and about a $5 million increase in expenditure. So that's where the 175.
And the $5 million increase in expenditures because we've got more people, more government services, etc.
Exactly.
More K through 12 for the kids and so on.
Exactly.
Okay. And again, and we've done nothing in scenario 1, nothing to mitigate that with corresponding cuts in government spending. It's assuming that that's stayed on track.
Exactly.
Now we go to scenario 2 and explain the difference.
And so here, there has been a cut made of $180 million to government spending to kind of out of the general pot of but this is kind of again the general government spending. So
this is assuming that we actually cut an entire $180 million to pay for this thing out of reduction in government services. So that's why
yes.
Payroll goes down, less income tax base, and there's a net decrease back to the state.
Yes, and so we wanted to provide both of these scenarios to give you some kind of balance on, whether you cut or didn't cut the spending in concordance with the decrease in revenue.
Okay, thank you.
All right, we got one more question, Senator Dismay.
Yeah,